Hello from Otet Markets. This is Ahuro with US inflation data review and market reaction. As we can see here, the US inflation in December 2024 had some moderation slowing down, but what we have here, we have to see in more detail. Let's first check the data in the overall data. Core inflation on the monthly scale increased by 0.2%, less than 0.3% expectations previous months. On the annual scale, core CPI fell to 3.2%, lower than 3.3%. The headline inflation or CPI fell to increase by 0.4%, more than 0.3% of previous months, and in line with expectations. Same with the annual scale inflation headline, which increased by 2.9% annually, more than 2.7% in November, but in line with market expectations. Let's see these data in more detail. This is the CPI or Consumer Price Index in monthly scale during the past 12 months. As you can see here, the 12 months ago it was 0.3%, then again increased to 0.4%, 4%, 3%, 0%, fell by 0.1%, then increased by 0.2%, 2%, 2%. That was repeated 1, 2, 3, 4 months, increased by 0.2%, then 1 month 0.3%, and now 0.4%, which we can understand that CPI is already stabilized around 0.2 or 0.3%. So the CPI on the monthly scale increasing about 0.2, 0.3%, which means on the annual scale, just about more than 2%, 2.3%, something like that, on the annual scale, 2.2, 2.3% on the annual. So this is what happened in the CPI, and the core CPI, which was 0.2% almost 12 months ago, increased to 0.3%, again fell to 0.2%. It was around 0.2, 0.3, it was about 0.3 and 0.4% of the most months, mostly around 0.3%. Average, we can say that on the monthly scale, core CPI increasing around 0.3%, which means the annual it can be around 3.4, 3.6%, something like that. So that's what we can see here, which means that inflation, if you look at the more data, we can say that inflation at the first glance, we can say yes, that data were lower than expectations for the core CPI, and the headline inflation was in line with expectations. So the market could be react as like that. Okay, the inflation is under control, and we are in a positive. We are in a progress. We have a progress in controlling the inflation. However, on the monthly scale, if we look at the more data, we can see that no, the inflation is under control somehow, but underlying inflation is still worrying, is still concerns here, as you can see that the numbers are growing. Repeatedly, we talk about that the inflation target, which is right now around 2%, can change to 0.2 around 3% annually. So I mean, the base of headline target right now, the inflation target inflation for the central banks in the United States is around 2%. We may change it. We may see that the Federal Reserve could change it towards maybe 2.5%. Maybe, because the natural rate right now is more than this, and we cannot bring the we cannot bring the rate so fast towards 2%. On the other hand, we can see that inflation is more than 2%. So the natural rate could be around 2.5%. So the target rate also could change. The target inflation also could change. So we have to wait and see what's going to happen later this year. But these data generally means that we move, for now, at least for now, we can say that the central bank cannot cut the rates by more than 2% each time by 25 basis points in 2025, unless something happened different here in the market, and that's needed time to look and watch. But based on the data so far we have right now is this. And based on these data, if you look at the market reaction as the numbers at the first glance was somehow the positive, looking, yeah, the core CPI is less than market expected, and also the CPI is somehow is under control, in line with expectations. the first reaction, market reaction, is a positive. So the first reaction, and the positive, I mean by the meaning of controlling the inflation. So as you could see here, as you can see here in the chart, the U.S. dollar index fell towards 108.40 as a first reaction from 109, but now it's correcting. So it's generally the market by spending the time, by passing the time, market can realize that inflation is controlling, but not as fast, but it's not falling or slowing down as fast as the Fed was expecting, or the investors, or anyway, the market participants, they were expecting. So this underlying factors that still the holding the inflation higher is still there. So are still there. So we can say that the inflation still has more, will need more effort to be controlled. That's why we can expect the US dollar index to have mostly side movement with even somehow the upside tendency. But right now we cannot say that the US dollar index can change its direction, as these data cannot change the Federal Reserve decisions, which is going to be which is they're going to hold the meeting 2 weeks later. So we cannot say that these data, there are some, so they had such a big surprise that, oh, based on this data we can expect that the Federal Reserve can change the policies. No, that's not, it doesn't mean that. That's why the first reaction of the market reaction, we can say that market overreacted to this data. Even though this the stock, looking at the gold chart, we can see that, okay, the gold chart's gold almost reached to 2,700, but now it's getting some correction. But generally, we can say that the gold is, no matter to this data, generally gold, it was in a slight uptrend, and anyway, the gold is increasing, no matter if the dollar gets weaker, or or in the other hand, the stock market gets weaker, which is expected to be happen. Looking at the stock market, we can see the SP 500 in the first reaction, it increased twice, almost 6,000 to 5,009, more than 5,900. But as I said, these data, they are not a data that they can change the Federal Reserve decisions or the past. So that's why the overreacted of this, that we can say that the market had overreaction, and it can get the correction. However, we have, as you know, the earnings season is starting today, and if because of such a good earnings, and we say that, okay, these earnings, they are really great, and they can move the markets higher, that can be the different scenario. But based on the inflation numbers, we cannot say that these inflation numbers are the numbers that they can encourage the stock markets to increase higher right now. I don't expect to see the stock market to increasing much more than these levels before second half. So after the second half, we can say that the stock market can again start increasing and go to the positive road. But right now, we can say that the market still is going to analyze the condition, analyze the new government, the new administrations and government policies. So these inflations also, as I mentioned again, these inflation numbers are not a numbers that can change the Federal Reserve decisions, and they're bad and programs. That was so the stock market can get under pressure. That was generally the market reaction, the inflation data and the market reaction, how the market can react to these data. If you had any other question, do not hesitate to write down under this video. I'll try to get back to you as soon as I can. Have a good time. Bye bye.